So let's just say, guys, 2025 has not been good for the stock market, and I've been getting a lot of comments and questions lately. Stas, is this going to get worse? This is the worst stock market I've seen in recent times. Oh my God, is it time to panic? Should I sell? So we're going to break down exactly that in this video. We're going to cover the charts, my thoughts, what I'm doing, kind of some market psychology, if you will, as well. But first, hit the like button. Do not forget to subscribe here on YouTube, guys, and check out my second channel if you haven't done so already. It's called Stas Talks Money, and we're trying to get that channel to 1,000 subscribers. And, well, I can't do it. Well, I guess I could do it without you. It might take a little longer through the, YouTube algorithm. But since I have you guys here on the main channel, do me a solid. Do me a solid. Feel free to go subscribe to this channel. It's mostly personal finance content. We're talking about how Americans can't stop spending money, car payments are going insane. We talk a little bit about the housing market, and it's a complete different type of channel from this. The content's completely different, and it's good content in my opinion, or else I wouldn't be producing it, and people like it. So go check it out. Make sure to go subscribe using that link down below. I appreciate all of your support here on YouTube as always, guys. And now let's get into it. So like I said, 2025 has not been good so far, at least to the stock market, as the S&P 500 is down about $30 from all-time highs. Looking here at SPY, of course, which is the most popular ETF that traders look at for the S&P 500. And the sell-off started at the end of last year. A lot of it did, at least, right? The majority of the sell-off, at least on SPY, but it started flattening out in the beginning of December, right? I think QQQ did as well. So we noticed some signs of toppiness, if you will, earlier in December, middle of December, and then we started selling off, and it accelerated in 2025 to start the year, right? So, like I said, I've been getting comments, Stas, this is the worst market I've seen in recent times. I can't see it getting better. And let me answer that. Let me what's the word here? Let me address that. First of all, guys, this is nowhere near the worst market I've seen. In fact, this still looks really good. This is actually a normal, healthy market that we're in. If you think QQQ being down a whopping, are you ready for this, guys? If you think it being down 6% in the span of a month is bad, think again. Think again. And I know a lot of these people asking, or making these comments saying, oh my God, it's the worst market I've seen recently or whatever, or I've ever seen, considering they're beginners. These people obviously are beginners, and they can only speak from their experience. But what I can tell you, man, it's been a lot worse. If you were in the stock market during the pandemic, yeah, you're going to realize how much of a nothing burger, if you will, this is right here, this sell-off we're seeing, how irrelevant it really is. If you were in the markets a couple years ago, we had the Dow Jones go down like 10, 12% in a day. Yeah, in one day we had that happen. And, people are freaking out now that QQQ's down 6% in a month. I mean, this is nothing, first of all. So I'm glad we got that out of the way. This sell-off is not a big deal whatsoever. This is normal market price action, normal activity. The market's just adjusting itself because, well, there's a lot of reasons why. We'll talk a little bit about that in this video, but we ran up so much in 2024. It's the turn of the new year, and, we have a new president coming in. The Fed just said they're not looking to cut rates as aggressively as expected in 2025, previously expected. There's a lot of other things as well. And the jobs market, the jobs report was stronger than expected. So now the Fed really might not cut the rates. So that's what's going on right now. And we're seeing a little sell-off here But again, like I said, guys, it's not that serious at all, in my opinion. And earnings season is right around the corner. And do you want to know what could bring stocks back like this? Well, good earnings, and very important to watch for, or what's important to watch for is the guidance. Great guidance could really bring back the markets in the short term. And earnings season's here, just like that. It's back, right? We have banks kicking off earnings at the end of this week coming up. We have J.P. Morgan, we have Goldman Sachs, Bank of America, I think Citi as well. Maybe Morgan Stanley, they might be the next week. Wells Fargo as well. I forget if they're this week, early next week. Either way, earnings are coming up. We also have another big company, Taiwan Semiconductor. I'm watching that one very closely. And that's going to set the tone. We have big tech slowly after that, after banks. And if these companies crush the earnings for the most part, if guidance overall amongst the biggest companies is strong, that could be all it takes for this to rebound. Literally, that's it, right? And another thing I like to say to people, especially during sell-offs, when in doubt, zoom out. When in doubt, zoom out. That's all you got to do, right? Pull up a larger time frame and you'll be like, oh, wait a second. This is just a blip. It's not a big deal. Like I said, man, we've seen way worse markets than this. This is just normal price action. I mean, look, back over the summer, we had a big sell-off like this. And honestly, nobody was really batting too much of an eye back then. I mean, it was a decent drop in QQQ, but, it feels like people are freaking out more about this drop, even though it's 3 times less of the drop than what we got back in July. Make it make sense, guys. I don't get it. Back in July, we actually got a big drop in QQQ, about 16, 17%. And you guys see what happened after that, right? We rebounded, and now we're down about 6%. Not a big deal. And it looks like we might go a bit lower. Maybe we fill the gap down to 495. Big freaking deal, guys. Big freaking deal, right? And on SPY, if I pull this up, we can see back in July we had a bit of a haircut, 9-10%, all right? Didn't last more than just a couple of weeks, and then we rebounded, which I think is kind of like what this is going to play out like here moving forward. So, yeah, when in doubt, zoom out, guys. And for me, it's the regular program over here, guys. My trading, I'm doing my trading. You guys know all about that. We cover that. But my long-term buys, it's still the routine, right? Every week I'm buying VTI. I buy VXUS here and there. I rebalance a little bit here and there. And as for individual stocks, it's been, now that stocks are getting hit in the grand scheme of things, the indexes, individual stocks have come down to decent levels, some of them at least, and I've been adding where I see the value in my portfolio, right? So AMD I've added a little bit, right, recently. Advanced Micro Devices, I've bought more XLE, which is an energy ETF I've covered many times here on the channel. I've nibbled a little bit more of NVIDIA, which we've covered extensively here, obviously. And, other stocks. I mean, guys, for me, when I'm looking at my portfolio, if there's no stocks that are at decent values, I'm not going to buy or force it, right? I'm not going to even average into more shares if it's not not at a decent price. And this could happen for weeks, right? There might be weeks where I don't buy a long-term stock, or add to an existing long-term stock. And during those weeks where I'm not adding to a position, I'm stacking up cash, right? I'm buying these ETFs every week, no matter what. That's the strategy with the ETFs. And I'm just sitting on my hands, waiting for deals on individual stocks. That's kind of what I'm doing on weeks where I don't see anything out there. And that's the way to go, right? You're not supposed to force it every week and dollar cost average into stocks no matter where they're at. I'm talking individual stocks because price really matters with individual stocks. And obviously it matters to an extent with ETFs, but the strategy with ETFs is dollar cost average and hold for 10, 20, 30 years, right? So I'm not nitpicking the price as much as a stock that I might just own for a year or a couple of years or maybe a couple months, right? So that's kind of how that goes. And yeah, I mean, that's pretty much it. I mean, we kind of rambled a bit all over the, not all over the place, but the moral of the story here is, guys, yes, stocks are taking a beating. Yes, we're getting a sell-off in the overall market. Some uncertainty. The VIX is up a bit. We have metals creeping up. But guys, this is normal. This is normal. And every year, you notice stocks take, I forget the exact statistic on this, but we've talked about it. But every year, stocks have, 5, 6, 7 corrections on average, or, the indexes, whatever the stat is. You guys know. And a correction is a drop of around 10% or more, 10, 20%. It's normal. It's normal. And that's what we're seeing right now. So relax, guys. Take a chill pill. It's going to be okay. Maybe turn your computer off for a couple days. You'll be all right. Stocks are going to be fine. And yeah, that's just my take here. Quick little update video. Let me know your thoughts in the comments down below. Hit the like button. Don't forget to subscribe here on YouTube on the main channel and the second channel, link down below. And snag up your stocks from Moomoo. Open up your account, deposit at least $100. You get 5 free stocks. Deposit at least $1,000. You get 10 more free stocks. And overall, for now, your uninvested cash will earn up to 8.1% APY. So guys, use that link or go to stocksurfest.com/Moomoo, and I'll catch you guys in the next video.